FSN Radio. It's all about what's next. Go to financialsurvivalnetwork.com and sign up for your free weekly newsletter. You'll also get 3 free reports. The Financial Survival Network. It's all about what's next.
Welcome. You are listening to the Financial Survival Network. I'm Kerry Lutz, and today is 2/19/20. Well, we saw gold go up $20 the ounce or better. Gold broke $1,600. Silver breaks $18 the ounce the same day. What is going on here? Well, let us know how you think the cause is, the proximate cause, as we used to say in the law. Email us, kl@kerrylutz.com. Right now, let's hear from our good friend, Michael Pento. You find him at pentoport.com. And Michael, welcome back. It's great to have you. So why the sudden spike in precious metals? I mean, it's been bumping up, gradually gets knocked down, bumps up again. Last time we were over 1,600 was the day that Soleimani was taken out, and now we're back over 1,600. What is your theory here?
Okay, so my theory is, and one always gets into trouble when you try to explain intraday moves in the price of anything, and that, of course, includes gold. But my theory is, my hunch is that, this morning we came in, gold was only up about $6, $4 to $6 an ounce all through the morning, and then it just had a sudden spike. That spike coincided with the release of Mike Bloomberg's economic agenda against Wall Street. And he was going to impose a Wall Street tax, just like Bernie Sanders. Now, one could argue that the U.S. Voting populace is not quite ready for a socialist/communist. And I hope and agree with that presumption. But the presumption also is that Mike Bloomberg is a viable contender to Donald Trump. Mm-hmm. And if he does win and imposes this Wall Street tax, it's going to be absolutely devastating to asset prices, which are already in the thermosphere as far as valuations are concerned. So if you're going to crush asset prices, the hedge, a perfect hedge, has always been one of the usefulnesses of gold is it's a great hedge and a ballast against a falling stock market.
So you think that Bloomberg is really a viable candidate?
I do, especially if he chooses, Kamala Harris or perhaps even Hillary Clinton was, thrown.
I don't believe that. That's a bridge. That's a bridge too far.
Yeah. Well, put it this way: if he chooses a very carefully selected running mate, he is a mayor who had a very successful run in the city of New York. He is a moderate Democrat and a good answer to some of the radical liberals and lefties that are running against Donald Trump on the Democratic ticket.
I hear what you're saying, but the guy, his first election cost him $67 a vote. By the time his last election, his third election, his farewell inauguration, he was up to $107 per vote. Now, if he does that in the U.S. to get 65 million votes, it's going to cost him upwards of, about $7 billion. And I already believe that he's going to get the nomination because he owns the Democratic Party and nobody can stand up against him. So it's a war against Bernie, against Bloomberg. You don't forget, Bernie's got, I call him Bernie McGovern. He's got these believers, just like in 72, there was millions of people who really believed that George McGovern could win. And now those people, they're half of them are dead. The rest are aging baby boomers like us. But the people who believe in Bernie they're alkalites. They are like hard and fast fanatics. Right. They will never vote for a Bloomberg. They just will not do it. I'm convinced.
Well, Wall Street, you might be right, but Wall Street is also convinced that Bloomberg is a viable candidate, and a great moderate approach or an antidote or an offsetting candidate to the rest of the liberal Democrats. And now he is now moving predictably far to the left to get the primary. So it might have unsettled Wall Street. And that's, the timing of that announcement and the move in precious metals is coincidental, to say the least.
Yeah. Well, I think that That is about the best explanation I've heard, and it could well be the case. But yeah, Bloomberg, besides his nanny case, has got a lot of baggage that comes with him. And,
of course.
I've met the guy before, totally nice guy before he got any power, totally changed him, a completely nice person. I don't think he ever really planned to run for mayor, but there was like no sane choice. After Giuliani left, we would have had Comrade de Blasio that much sooner, or somebody like him, right? So he saved us 12 years of lunacidal liberal policies, right? It just made that word up. Lunacidal.
To my point, de Blasio was running for president as well, and I don't think he didn't have really a great chance of winning, but Bloomberg is certainly more a viable candidate, and Wall Street doesn't like any viable candidate to run that beats Donald Trump in the polls, which if you don't believe polls, I don't really believe polls anyway, because Trump showed absolutely convincingly that your vote, a vote for Donald Trump or a vote for Hillary Clinton was not held in the same intensity. In other words, if you were going to vote for Donald Trump, you most likely were really looking forward to, and even if it was like a Noah's Ark flood outside, you were going to go and vote for Donald Trump.
Correct.
And the other side, Hillary Clinton, well, yeah, maybe I'll vote for Hillary, but maybe if it's sunny out, I'll stay and sun myself. That's the kind of intensity. So it's not who you're going to vote for in the polls, is also an intensity or a willingness or an energy behind that vote. And that's not really picked up in the traditional polling metrics.
No, it's impossible. And let's face it, Bloomberg, he can buy voters, he can buy the party, he can buy polls as well. Probably gave him a list of people to go and poll, knowing him, and a nice check to their payable to whatever their cause is. I mean, I'm not saying he did it, but I'm certainly saying that he's capable of it and wouldn't hesitate, because he's approaching this like he will stop at nothing to get the brass ring.
Yep, I agree with that.
No amount of money. But on the other hand, remember, if money could buy the presidency, we would have had President Nelson Rockefeller. He had more money then than Bloomberg has now, when you take into account the family fortune and everything else. And he was never able to become president for exactly that reason. And he was a Republican, which, money and politics and big business, that was emblematic of the Republican Party back in the 50s and 60s, the country club Republicans, CEOs and everything else. Now the Democrats are the party of the CEOs.
I just want to leave it with this note that I just find it very interesting. As the middle class becomes disintegrated and eviscerated by what central banks are doing around the world, we will have potentially 2 billionaires vying for the White House.
Yeah. Evil billionaire, says Bernie, and then we got Bernie. He's just a multimillionaire who's never held a productive job in his life, been a government employee, government health care, government housing. Well, I don't know. Probably not that. He probably had to rent his own place. He's got 3 houses, so he doesn't have to worry. He's not exactly like this citizen politician that the founders envisioned when they drafted the Constitution. And,
correct.
Hey, so the debt keeps going up. What is going on with repo madness right now? Where do we stand with it? They're pumping money in. We just don't hear anything about it, right?
Well, you did hear a little bit about it. First of all, let's talk about the debt. You mentioned the debt. Do you know that the annual deficits are now up 25% year over year?
Mm-hmm.
And I find that striking, that since this is the greatest economy the world has ever seen, not just the United States, but the world has ever seen, according to Donald Trump, which, by the way, again, I did vote for him. I support Donald Trump. But this is not the greatest economy the world has ever seen. That's clearly a fallacy. But the debt is surging 25%. Year over year. We're now $23.5 trillion. And Jerome Powell said something very interesting in his latest Humphrey Hawkins, what used to be called Humphrey Hawkins testimony on February 11th. He avowed that interest rates, low interest rates, record low interest rates, are no longer an option. They are, in fact, a reality. And I think that's a tacit admission, Kerry, that asset bubbles have grown so large, have become so onerous and humongous, and the debt levels outstanding have become so immense that they cannot be serviced without 0% or virtually free money.
And monetization.
And I think that's what's going on. I'm sorry, go ahead.
I'm sorry. And monetization effectively, right?
Well, that's, I heard somebody today on Bloomberg, a very intelligent woman. She works for Bloomberg. She's a Bloomberg analyst, talking about how what's going on right now with the Federal Reserve is not QE. She was deriding that notion. And she said because the balance sheet increase, was down, it was $4.5 trillion, then it went down to $3.7 trillion. Now it's back up to $4.2 trillion. So $500 billion of balance sheet increase. And that's primarily from the Fed's $60 billion per month non-QE, and from the $300 billion revolving repo facility. And I have to wonder, don't you remember that the Fed told us back in 2008, all the way through 2014, 2015, that this increase in the Fed's balance sheet was completely temporary. So how do you define temporary by the Federal Reserve? They have a very strange definition of the word temporary. Jerome Powell then went on his quantitative tightening program, and they ended up selling off about $750 billion worth of the balance sheet. That didn't work out too well. If you remember, in the fourth quarter of 2018, the Russell 2000 was down 25%. The S&P 500 was down 20% or almost 20%. Global markets went into free fall, down 25%.
Right.
And the junk bond market, the all-important junk bond market, which has absolutely surged in size, a record amount of corporate debt of the junk variety, that completely froze. There wasn't a single junk bond sold in December. So how temporary is this non-QE? I have to ask. I mean, it's permanent. We've learned now, coming out of the crisis, is that what the Fed has been, quote unquote, forced to do is permanent in nature. The size of the balance sheet went to $4.5 trillion. Now it's 4.2. It's getting bigger by the day. That's permanent, and it's getting bigger. The amount of deficits that we have, $1 trillion deficits now, over $1 trillion, that's permanent and getting larger. And even the repo facility is supposed to be temporary, it's supposed to be wound down in the second quarter of this year. Is it really going to be wound down in the face of this coronavirus? Does anybody really believe it? And if it is wound down, I mean, what happens, Terry, when the Fed steps in and manipulates artificially markets and takes interest rates lower, what's the response? The response is twofold. A knee-jerk response higher in asset prices and concomitant increase in the amount of debt that's being issued. So every time the Fed goes down the ladder towards zero, more debt is taken on, asset bubbles get higher, and it makes, every time this occurs, it makes the normalization process more impossible. So what makes them think it's going to be possible the next time around? I have no idea. It clearly is not. Asset bubbles, debt service have never been more reliant on the Fed's consistent and permanent QE.
Yeah, so it's the new norm, effectively. And if they don't pump the money in, then we see what happens. We see a crash. Wall Street, letting the Fed know, either you do this or it's over. And certainly they're going to keep doing it at least until after the election, right?
FSN Radio. It's all about what's next.
Otis Gold Corp is a gold development and exploration company with quality projects in the pro-mining state of Idaho. Otis's flagship Kilgore project has a resource of 961,000 gold ounces, and its recently published preliminary economic assessment demonstrated an impressive post-tax IRR of 53% at $1,500 gold. In addition to the significant expansion potential at Kilgore, Otis is exploring its highly prospective Oakley project. This Carlin-type gold deposit already has an inferred resource, and previous near-surface drilling intersected 123 meters of 0.69 grams per ton gold. Otis Gold Corp trades in New York under the ticker OGLDF and in Toronto under the ticker OOO. That's OOO. To learn more, go to otisgold.com. That's otisgold.com.
The Financial Survival Network. It's all about what's next.
Yeah, I mean, that's the third mandate, right? That stable prices used to be no inflation. Right. Now it's by the way, core CPI has been above 2% for over 2 years, Harry. So that's not even enough for these people. They want more inflation. Mm-hmm. They believe that full employment is somehow, if everybody's working, or a very high percentage of people working, is I guess you were going to say, elixir for inflation. That's not. Inflation is about the market's confidence in the purchasing power of a currency. And as that purchasing power's confidence attenuates, you see inflation rise. And you can attenuate a confidence in a market's purchasing power of its currency, the belief and the faith in that currency, by printing a whole heck of a lot of it. There are other ways you can get inflation. Let's just say, for example, if our U.S. military was wiped out overnight, then that would hurt the confidence in the purchasing power of the dollar. But primarily, it's a confidence in the dollar's purchasing power, or any currency that you're talking about, you're measuring inflation in. It doesn't come from prosperity. But the third leg now is that we can never have, Gary, don't you know, a downtick in asset. I guess that's the case when asset prices are now 1.6 times, just stock prices, not total asset prices, not talking about real estate. I'm talking about just equities. Equities as a percentage of the economy are now 1.6 times the underlying economic growth. The average of that ratio, Kerry, is 0.8. So we're a whole turn higher than what is considered normal in the world. And when your economic growth is then dependent upon a stock market that never goes down, the Fed now has another mandate: never see a down market again.
Yeah, I didn't see that in their charter. Did you? They were supposed to ensure stable prices and full employment, right, and economic growth, right? Ensure economic expansion, which sounds like a lot of conflicting goals and priorities. And how do you decide which one you want to be doing at this particular moment?
Terry, it's communism. It's you're talking about Bernie Sanders. We have a communist dictatorship at the central bank, not just the Fed, all central banks around the world. It's no different in the People's Bank of China. It's the same thing that goes around in the ECB and the Bank of Japan. Is that we will dictate the cost of money, which is the most important price mechanism that exists in any market, in any economy. What is the cost of money, which should be determined by the supply of savings versus the demand for credit?
Right.
But they've decided what the base money supply should be. They decide what the cost of money should be. They decide how much QE should be there, and if there's a repo facility.
Wow.
If banks can have an outlet to go and borrow money outside of what the free market would allow. So we're having a communist takeover of our economic system, even without Bernie Sanders. Believe me, I'm correct.
Yeah, well, I think you're correct. We see it, and more of the economic activity is really directed by the Fed and the federal government. They keep expanding, and their impact on the economy as they expand grows with them. So we're kind of in this box. We're in a Hobson's choice. We have no really ways out of it that would not entail crashing the economy. So that leads us to the next thing. How do you protect yourself? How do you make sure that you're not going to get wiped out with everyone else?
Yeah. Well, thank you for asking the question. So it's the actual purpose behind Pento portfolio strategies. I'm not one who's incapable of spotting bubbles. I spotted the 2000 blow up in the NASDAQ. I was on record complaining about the deformations in the housing market throughout 2006, 2007, 2008. I can tell you this: if you are one who believes that the stock market can't go down, you're in for a very rude awakening. I mean, all I have to just point to history. I could just point to what's happened, currently overseas. If you look at Japan, their stock market is still down some 50% from where it was in 1989. Chinese stock market, Shanghai, down about the same since where it was the top in 2007. So even if you have a communist dictatorship over your entire economy and a communist dictatorship over the central bank, you still can suffer significant losses in stock prices. You cannot be a passively managed individual any longer because the deformations have never been more exaggerated than they are today. So if you think you lost 80% of your money in the NASDAQ blow up in the year 2000, if you lost over 50% in the S&P 500 in 2007 to 2009, March 2009, if you think that can't happen again, you're sadly mistaken. So you have to have an active managing strategy, and you should be with a manager who actually has a model that works and is proven to work, and it looks at all of the different components that can affect the value of equity. So I have a 20-point model. I have 10 indicators for inflation, 10 indicators for the economic cycle. You want to know, are we inflating or are we deflating? Are we recessing or are we growing? And in that case, you'll know where your money is best placed. What sector, what category? Should you overweight bonds? Should you be short bonds? Should you own utilities or should you own high beta stocks? What factor, what sector? And if you understand that, you have a chance not only to survive and prosper when things are good, but to protect and profit during the next economic cycle that turns negative, which I got to tell you, Kerry, unlike our Federal Reserve head who said, he went on record saying that right now the economy is completely stable and very viable. He sees no problems at all out there that could upset the economy or the market. He is wrong, just as the Fed's long and well-documented history of getting everything wrong. This is another one of those statements that they're going to have to eat later on and probably won't be too long from now.
We know. Seen this one before. And, like he's like the Baghdad Bob of the financial sector, You just know he's lying through his teeth. Best economy ever. No, that's remember Jerome Powell told us, and Janet Yellen before him, saying the repo, the quantitative tightening process was running in the background, unnoticeable to Wall Street. It would be like watching paint dry, and it would be on autopilot, and nothing would take them off track. I mean, just a matter of months after saying that ridiculous statement, he had to start cutting rates and then go back into QE4. So how much do these people really know? Either they're ignorant or are they lying to you, or are they both? I say that respectfully. I'm not trying to be hyperbolic. I mean, these are the facts. I mean, do you remember Ben Bernanke telling you the subprime mortgage crisis is contained? Yeah, and McCain saying the economy is fundamentally sound. Yeah.
So who do you trust, politicians, or do you trust people who have only one motivation in mind, which is to make money in all circumstances? People who don't sell you products, who just get paid from your success. That's me. So if you have I have around a limit of around $100,000 to invest. I'll actively manage your portfolio. I can send you the track record. I here myself have Charles Schwab Institutional, the entire company of Charles Schwab Institutional behind me. I pay an outside firm that has a 40-person team that digs data for me and does research for me. And then I have the people here in the office here for Pento work directly for me. So we have a large amount of people that are working to make sure that your success is my absolute top priority.
Well, and that is a noble and worthy goal. And I know you're good at it. You've been doing it a long time. And you're one of the few financial guys out there who actually plans for the worst, hopes for the best, but plans for the worst. I think we need that attitude to become prevalent, because when market valuations, I didn't even talk to you about Tesla, but I think Tesla is going to break 1,000. I thought it was going to crash at 650, but then it went up to nearly 1,000. Then it traced back. It's up again today, the mid 800s. It's going to break 1,000, and it's, it is the emblematic symbol of the bull market today.
Well, I just tell you, before I came on today, I was listening to Leon Cooperman tout a holding. I think it's Workday is the holding that he was touting. Its forward PE, Terry, is 99.
Oh my goodness!
Now this is not emblematic of what occurred in the late 90s
and the 20s, 29. Hey, we're in the roaring 20s now. Got to sit back and enjoy it, Michael. All right. The roaring 20s only comes once a century.
Here's the mistake, Kerry. Let's just talk for a second. Here's the mistake. I think a lot of your listeners, a lot of people out there, they would love to participate in this market in a hedged fashion, in a ballasted format, where they can maybe participate in the upside instead of hoarding in cash and staying in cash and getting, as far as their purchasing power is concerned, vastly depleted. In a real term sense, as far as their real returns.
They're getting nothing.
They're getting negative after indexed for inflation.
Right.
So what if they had an advisor who could, quote unquote, try to safely participate in the upside, but then it had a model that let them know when it was time to head for the very narrow exit door. That's what I specialize in here at Pento Portfolio Strategy.
All right. Well, hey, we know that. We appreciate you coming on and helping to clear things up. Like I call it, a lunacidal market. And you got to watch out for it for sure. Make sure you go over to Michael's site, which is Pentoport, P-E-N-T-O port.com. Got a link to it in the show notes. Check it out. Questions, comments from Michael? Love to hear from you. Michael, you're one of our most popular guests by far. The email address is kl@kerrylutz.com. Twitter feed @KerryLutz. Facebook page is Financial Survival Network, and our home site, financialsurvivalnetwork.com. Michael, we'll talk to you next month. We'll see how much more this lunacy can continue onward.
Thank you so much for having me on the program. I really appreciate it, Kerry.
FSN Radio. It's all about what's next. Go to financialsurvivalnetwork.com and sign up for your free weekly newsletter. You'll also get 3 free reports. The Financial Survival Network. It's all about what's next.